Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone is doing well. We've got a pretty quiet calendar still, which is really refreshing compared to what we've dealt with the last few weeks. So we'll just kind of give ourselves a quick reminder that we do have a number of hot zones still in play, but just not as many, and none FOMC speaking engagements. They're in their blackout period, which is great. Uh, and we had ISM yesterday, really didn't move the market all that much. Probably the next big hot zone in terms of scheduled high impact, high volume, high volatility that we're going to get is on Wednesday with the Bank of Canada. ECB is clearly one of the most important central banks that I watch to look at its effect on the US dollar. But BOC, Bank of Canada, rate statements, overnight rates, they have been a mover here in the US. So keep an eye on that one. That's probably the next significant hot zone. So pretty quiet till Thursdays, unemployment claims, and then we get into pretty much a quiet Friday. So pretty refreshing. So we get to trade price action and whatever else is affecting the market. Debt ceiling pretty much in the rearview mirror. Is the Federal Reserve going to hike in June? Probably not. We're going to get a hold, and then that kicks the can to July, where there is a bit of an expectation for that rate hike to come then. So rather than the June hike, looks like July, and that's pretty much where we sit right now. Then we move on to what it is. Well, got to talk a little bit about Apple, mainly because if we think about Apple, we're jumping into what is it that we are looking for in terms of the heaviest weighted stock in the NASDAQ, in the XLK sector, which is weighted within the Dow and the S&P and the NASDAQ. What is it up to now? Do people really care about that headset or not, right? Do we really care about the headset or not? I'll tell you, I am long Apple, but in all transparency, I could have had better timing on this one because I really did fade in some ways the WWDC event, probably a little too early, but we're sitting okay this morning. But ultimately, this is an uptrend. So are Apple's fate sitting with this what is it, a headset, this VR augmented reality? Do we really need? I don't know. Everyone's gonna make fun of this like we do every single new iPhone. Then this 3,500 pair of goggles so we can augment our pages, documents. It's going to come out and it's going to sell like hotcakes. Let's be real. So anyway, that's what we've got coming up. But why do we care about Apple? Why do we care about WWDC? Why do we care about this headset? Because Apple's so heavily weighted, right? And that's what we live in. We live in a high concentration weighted world. Beyond Apple, the two other sectors I'll be watching will be financials. Very important that if the S&P is to continue higher, it will be on these two cylinders, financials and healthcare, starting to move higher, playing a little bit of a game of catch up to tech. Why those three? Financials and healthcare are heavily weighted in the S&P and the Dow. So if that tech-led rally, that's in the engine pulling all three of these indices higher, if we're going to see better participation, just more help, it'll be from those other two. All right. So as always, gang, if you have any questions, feel free to type them on in, whatever symbol, time frame, favorite color, whatever it is, let me know. Type it on in. Good morning, Ann, from our training room. Having the levels so clearly on the weekly report. Oh, right. This week in the markets. I appreciate that, Ann. Yeah, we have a lot more charts in this week's issue as well. You could check out This Week in the Markets at www.thisweekinthemarkets.com. All right. So thanks, Ann. I appreciate that. Will I be buying the new unit? Editor, I'm not going to, probably. I may not be an early adopter. I seldom am. Let someone else deal with the first version. and then maybe the second or third, I probably will. Um, yeah, I probably, I'm not gonna lie, it's kind of cool. All right, yeah. But the real question is, does it make, an impact on? Look, I think Facebook's gonna come out. They've got their new pancake lenses. They're gonna come out with probably a headset 10x less cost. No exaggeration than Apple's $3,500 unit, but we'll see. We'll see what happens. Um, it was easy to forget about virtual and augmented reality with this AI conversation. All of a sudden, here comes all these VR, AR goggles, and we're already moved on to AI. It's kind of funny how our interests just kind of migrate. All right, PLTR. What is beautiful uptrend on the daily? What are my thoughts? Number one, it's an uptrend. Number two, it just punched up to a higher high. And that tends to keep the bullish momentum and buying the dip, right? Because let's face it, I don't want to be a buyer at the higher high. But when I see something like PLTR, what I want to do is I want to jump on over to, here we go. I'm going to jump on over to, take a peek here. This is TradingView. Take a peek at TradingView. And what I would like to do is find out, because it is a sub $20 name, if I pull up the action for this year, where is the volume? Where is the point of control? Where are those levels that attention's already hit? Right now, we're well above the point of control, which was down around $8 and change, and not much else up in this area other than the uptrend. So, I think buy the dip, whether that be a 21 EMA, whether that be a Fibonacci retracement, whether that be the 34 EMA wave, that's really up to how aggressive we want to be on that pullback buy. All right. So next up is, let's see. Next up, Praveen asks, is it possible to release the printed version of This Week in the Markets over the weekend so I can set up alerts? Number two. Praveen, it's going to go on a Monday. Yeah, it's going to go on a Monday. It's tough to ask folks to, tune in on the weekends and start working on a Sunday night or Saturday. Monday morning, it's usually posted by 8:30, 9 o'clock Monday mornings. We'll try to do it a little bit earlier on Monday. But yeah, probably not on the weekend. All right, next up, let's see what else we have here. Lynn mentions that, let's see, Unity is being added to the S&P. Yeah, I think at the end of the day, it's all about weighting, right, Lynn? 500 stocks in the S&P, and quite frankly, 480 of them don't even matter. Now, what do I mean by that? Don't even matter. They're weighted so insignificantly compared to the top 10 to 20 names that in order to make an impact on the index, those very low weighted names have to have outsized point moves. Therefore, when we have rallies, gang, and this is where when people talk about broad-based rallies, it's really sort of a misplaced thought. When we're looking at sort of these equal weighted indices, that's a misplaced idea. And here's why. Because that's not the world we live in. Do I care about broad-based rallies? Only if XLV and XLF are now participating, right? Because of their weighting. After that would come IYT, XLI, XLE, right? Do I need utilities to participate in a broad-based rally? Of course not. We don't need defensive names really to participate. If they do, cool, but we don't need them, right? Because what we need are those heavily weighted sectors, those heavily weighted stocks. Equal weighted indices, also equally unnecessary to consider because the S&P is not an equal weighted world. So there's this funny thing right now that I'm seeing in the financial universe, which is this idea that we need broad-based rallies. We need to be specific about which sectors are participating, like we talked about on the onset of the show. And so, right, it's good to know when there's shuffling happening. And then what do we want to know? What's the weighting, right? Because the weighting is ultimately telling us how important that is or isn't. Yeah. So thanks for the heads up. All right. Walmart is neutral on a daily. Slow still points up. Thoughts on long call? No, because remember, Mark, yeah, great eye. It's not totally, let's see what we have here. would say, yeah, here's the problem. You've got that neutral move, but look at where it's at. I mean, if we were looking at the timing of the slow stow, it was really, let's zoom in a little bit, and great eye for the neutral and great eye for the slow stow, but that was really way back at the end of May, right? It's already following through. So do I have thoughts on a long call? The train has left the station, right? We've already left the oversold zone for this one. So we'd either need to talk about maybe an overbought at some point, but I'd rather be long. So I agree with you. But yeah, the train left the station. So let's see if we get another shot at it or not. All right. Let's see what else we have here. Exxon. Let's take a peek. And you, sure. All right, so here's Exxon. Exxon's been, for the most part, gang, XLE has been really struggling as crude oil has been struggling. And even though OPEC has their production cuts in place, they held their production cuts, the compliance for the cuts by namely Russia have been low. So no one's fooled here, right? Just because cuts are what their policy is, just like a central bank has monetary policy, OPEC sets the policy for the production of crude. And if compliance is not high, then production cuts really aren't real. And so we can see how heavy crude has been because, frankly, there's still too much supply. At the end of the day, gang, the things that we learned in what was it, middle school or high school are still very much in play. Supply and demand. When did we first start learning about that, right? Supply. What is supply? Suppliers, sellers. Sellers are what? They create resistance or a ceiling, right? So we have too much supply and we have not enough demand. And it's the same story on Natty. And then that's going to affect Exxon. That's going to affect Chevron. That's going to affect the XLE. All of these are still struggling. These are still struggling and probably will until crude gains some traction. And by the way, it's really difficult. It's really difficult for a longer term rally, a sustained rally, to establish itself on simply curtailing supply. It really has to be met with increased demand. And that's not what's happening with crude, nor Natty for that matter. All right, as far as you goes, it's really a non-story here, gang. Everybody knows the news. It's going to move up higher. I'm not going to chase anything like this. Funny enough, it was in a downtrend. It was in a downtrend before the news, right? And it shot up, but this is for right now. The quality of the moves are going to be really much more similar to a meme stock than it will be a stock being added to the S&P. So I'll leave things like this. Personally, I'll leave things like this alone for now. All right, next up is Morgan. Sure. Love the Morgan question, Cameron, because again, where financials head to next, while more reliant on Berkshire, while more reliant on JP Morgan, Bank of America, Morgan's one of them. Morgan's probably one of the weaker corners of XLF. I believe in this week in the markets, it landed on the bearish, I believe it landed on the bearish watch list. Yeah, there it is. But however, here's what's funny. Within the XLF, there are some bullish names, JP Morgan, MasterCard, Visa. So yes, I print my own newsletter out because these are essentially, gang, this ends up just being my notes. These are my notes for the week, right? When I look at what it is that I need to keep an eye on, a lot of what we talk about is what makes its way into our conversation. And so, yeah, and we put a lot of charts in here too. All right, so moving on. Yeah, Morgan would have to be a short. It would have to be a short. And I don't know that the short side is really the side that I want to focus on, Cameron, but if there is something too short within the XLF, this for sure, I'm with you on that. All right, what about Boeing? What about Boeing? Boeing's starting to look like an uptrend, and that means the two things I like. One, we're north of the 200 propulsion. We are in the bullish hemisphere. And two, that's going to open up this brand new reorganized uptrend to our daily price movement range, our volatility zone buys. So that's what I'll be looking for there, Pete. I think that would work for Boeing used the volatility support levels to get long. All right, next up is Tesla. Tesla did what Amazon did, and we talked about this back when Amazon broke from the bearish hemisphere to the bullish hemisphere by crossing that equator that I call the 200 exponential. So this is definitely a daily price movement range buy zone. Probably 209 to about 204.80 is a good looking zone for a pullback, but I need weakness to buy into. As far as Nvidia goes, at this point, we've shot up, SMH is up. I think what I would look at PM is what else does Nvidia open the door to, right? What else does Nvidia open the door to? What's going to have to play catch up with Nvidia's move higher? So I'm actually, frankly, less interested in Nvidia and more interested in everything else that hasn't made a galactic move higher, right? Nvidia was a $300 stock. It's a $400 stock, right? You think about the 100-point move, and now Nvidia is sort of like the first one through the jungle. Now I'm wondering what's going to follow, right? So I'd like to focus on other uptrending names in the SMH to buy a dip. Maybe it's MU, maybe it's TSM, maybe it's going to be those kinds of names. Maybe it's AMD, but I'm not really focused on Nvidia. It's already made the monster move, so now it's sort of like, all right, who's next? Who's gonna jump in? Which other boat is gonna jump in on this rising tide? All right. Next up is any thoughts on Costco? All right, let's go take a peek. All right, taking a look at Costco. So anytime we're making new highs, the only time new highs are interesting is if a stock is in chop and those new highs are nearing resistance. And that is the case with Costco. Costco is potentially overbought. But if we're seeing a rising tide, am I really going to prioritize a short? I'm probably not. So when I think about, so there's two questions always when it comes to picking an individual stock. One, what's the overall directional bias of the broader averages? And then what's the overall directional bias of the individual sectors? And then what is that stock weighted in? So those are the things that I think about when it comes to the way in which I would view and potentially trade Costco. I'd rather be looking at an oversold buy, to be quite frank, versus an overbought short. So it's not that Costco is not tradable, but when I think about the priorities, I'm going to prioritize tech, and I'm going to prioritize dip buys in tech. And then I'm going to prioritize uptrends in XLV and XLF. And then I'm going to, you see what I'm saying? So if I can find trending markets are almost always going to be preferable to non-trending markets. And then in the non-trending market world, if I'm looking at, for the most part, higher highs, I want to find oversold buys, not overbought shorts. So that's how I would go through the process. But Costco is setting up to be an overbought short. I'm just not sure, Vicky. Yeah, I'm just not sure I would put it near the top of the list. All right. Next up is Netflix. So here's a trending name. Yeah, exactly, Vicky, you got it. So here's a trending name. This is something that would be at the upper end of my bullish watch list. By the daily price movement range support zone around 400. It's an overall uptrend. Absolutely. That's exactly the kind of thing that I'm looking at. So if we look at something like AMD, let's keep that same idea in mind as we go to T-Boy's question about AMD. AMD also in an uptrend. What do I want to do? Focus on the gray zones. Is AMD kind of moving like SMH? See, this is where AMD does. So AMD is going to need help from SMH to get going. It's going to need some help because, yeah, Nvidia has moved, but it's stuck waiting for the next reason to move. And then everything else is sort of getting in mode to hopefully establish support and then move higher. So I do like AMD. It's a good look. And maybe a shorter term time frame might be better. And here's why. T-Boy, take a look. If I use a 1 hour time frame with those same daily price movement ranges, I'm going to be able to buy and exit a little bit on the shorter end of a short-term swing trade time horizon. All right, gang, as always, thank you so much for being here for Charts and Coffee. off to day trade in the morning, as we do 5 days a week in the Sector Secrets Mastery, and also today and Thursday in the Simpler Futures room from 9:20 to 10:35. Just an hour and 5 minutes every single morning. That usually is enough to find some really great AM session, morning session day trades. All right, gang, I'll see you tomorrow, same time, same station. Be good to each other.